Bismillahirrahmanirrahim. Dear viewers and listeners, Assalamu alaikum. Hope you all are good. So this video is the continuation of my discussion on the subject of riba as it is enunciated in the glorious Quran. And today's question is interest earned on a business loan riba? As I have been emphasizing earlier, that there is a lot of confusion amongst the mind of many Muslims that interest and riba are the same concept, and this is due to the fact that majority of the Muslims are victims of the theory of taqleed or blind following, and they do not apply reason as it is commanded by the glorious Quran to distinguish between what is riba and why it is different from interest. Now, with reference to riba, we need to understand that the etymological meaning of the term riba as it is used in the glorious Quran is as a verb to grow or swell, or as a noun this would imply excessive growth or abnormality. So essentially it is an attributive term. Riba is an attributive term if we critically study the glorious Quran. On the contrary, when we talk about interest is the price of a factor of production, and this factor of production is called capital, whether it is physical capital or financial capital. As we all know that there are four factors of production: land, labor, capital and enterprise, and all these factors of production command a price or a cost for their use because they are limited in supply, and price of factor land or natural resources is called rent. For labor it is wages, for capital it is interest, and for enterprise this is called profit. So this is the fundamental difference that we need to keep in mind, that riba is an attributive term as it is explained in the glorious Quran. On the contrary, interest is an economic concept. It is the price of factor capital. Okay, with reference to today's question, I would like to explain some terms related to the concept of interest. You must have heard the term normal interest. Now, what is normal interest? Usually, normal interest would imply the equilibrium rate of interest that is prevalent in any economy at any given point in time. So this concept is called normal interest. So it means we assume, or the theory assumes, that there is competition in the market, and as a result of this competition the interest rate is also competitive, and this competitive interest rate that is determined through the interaction of demand for and supply of loan money is called the normal interest. Now, what is abnormal or excessive interest? This is another related concept. So logically we can understand this is the interest that is above the normal rate of interest, and this may arise in a situation where there are fewer creditors in the market, a monopoly, duopoly or oligopoly like situation, and whereby they are in a position to charge a higher interest rate to the borrowers than what should be charged or what is charged under a competitive business environment, and this is called abnormal interest or excessive interest. Then there is a concept of nominal interest or nominal interest rate. So nominal interest rate is the interest rate that includes an element of inflation in it. For example, when we say that the nominal interest rate for 1 year is 10% per annum, this would imply that this 10% is expressed inclusive of inflation rate. So whatever is the inflation rate during this 1 year time, this 10% includes that element of inflation. And another concept is the real interest rate. And of course, what is real interest rate? This is the interest rate that does not include the element of inflation. For example, if we say the nominal interest rate is 10% and the inflation rate during that tenure is 3%, then we'll say the real interest rate is 7%. That is 10% nominal rate minus 3% inflation rate, and this is the real interest rate. And this real interest rate basically confirms the purchasing power of money. So if somebody offers you 10% nominal rate and the rate of inflation is 3%, what you are getting in terms of purchasing power is 7% return on your loan money or your investment. And finally, there's a related concept with reference to business loan transaction, and this is called debenture. What is a debenture? Debenture is a financial instrument through which businesses raise loan or large corporations raise loan money. So this is basically an acknowledgement of a debt. And of course, in this case, the creditors are called debenture holders, just to distinguish them from the equity holder, who are the owners of a business, who have invested their personal money into the business. So when they invest the borrowed money, the creditors are called the debenture holders, and the very instrument through which that loan money is raised for a business, that is called a debenture. Now we look at the concept of riba as it is explained in the glorious Quran. Verse 130 of chapter 3 reads, "You who believe, do not consume riba, doubled and redoubled. Be mindful of God so that you may prosper." So if we look at the contents of this verse, we need to understand that riba is explained as an attribute, that is doubling and redoubling one's wealth. So, and you also need to keep this fact in mind that this is the only verse in the glorious Quran that explains what is riba. And the very words doubled and redoubled would imply that this is basically an attributive term, and God is commanding through this verse to the believers that they should not indulge themselves into any exploitative monetary or financial activity that may result into doubling and redoubling their wealth at the expense of somebody else. This is forbidden in the sight of God. If we just examine this verse in the historical context, we'll appreciate and understand that in the past, especially in the medieval and primitive societies, what used to be the case that if there was a borrower who was in need of money to meet his day-to-day obligations, probably a poor chap, a poor person, and when he would approach any rich person for the advancement of that loan, the very terms of the loan agreement were drafted in a manner whereby the poor person will keep on paying the interest rate that used to be exorbitant, and ultimately the loan amount will stay there and the poor person will become more poor, and whatever little wealth he or she may have, everything will be lost in the payment of that interest. So this was strictly prohibited even in the medieval societies also, based on the principles of morality, and this was hit by the glorious Quran also, that if a needy person seeks loan to meet his day-to-day obligations, then you should not charge riba on it, and it is better that you may waive off that amount as a charity, but it has no application to a business loan transaction, for the simple reason that in the modern world the business loans are governed within the framework of elaborate rules and regulations, economic principles, and more importantly, they are based on the monetary policy of the central bank of a country, a point that I'm going to explain later. Now, when we have to seek guidance from the glorious Quran in the context of a business loan transaction, there are two important verses. When these verses are read in conjunction, we can understand the implications of a business loan transaction in the sight of God. The first verse is given in chapter 2. This is verse 275, and it reads, "God has permitted trading and forbidden usury." So this simply implies that trading based on principles of morality, or what we call the fair trading, is permissible in the sight of God. But if this trading includes an element of riba, that is exploitative monetary or financial gain by the trader or by the merchant, then this is not acceptable. And the second verse is verse 29 of chapter 4, that reads that you who believe do not wrongfully consume each other's wealth but trade by mutual consent. So it means when there is an element of riba, this would ultimately result in wrongful consumption of each other's wealth. For example, if a merchant is charging very high price for the merchandise, so it means that he is asking for additional money from the buyer, and it means the buyer has to forego that additional money, and this may result in reduction of his wealth. Similarly, if there is a business loan transaction and the creditors are charging very exorbitant interest rate, again this would result in reduction in the wealth of the borrower. So the glorious Quran put emphasis on mutual consent, and the legal terms we call it at arm's length principle. So what is mutual consent or at arm's length principle? Is a situation whereby the debtor and the creditor, or the borrower and the lender, they decide the term of the loan, the rate of interest on that loan money, and all other related matters with mutual consent, and no single party is in a position to dominate or influence the consent of the other party. As I explained earlier, in the past, for personal loan transactions, there could be an element of exploitation, and that would ultimately give birth to the concept of riba, and that was strictly prohibited, and that is still strictly prohibited in the sight of God. But when we talk about business loan in the modern world, we need to appreciate the fact that in the modern world, the business loans are governed by very elaborate framework of rules and regulations. There are strict economic principles and concepts, as well as we need to keep in mind the fact that the interest rate that is charged on a business loan is dependent upon several factors. One such factor is the interest rate, or the central interest rate determined by the central bank of a country or an economy, because all other interest rates revolve around that central interest rate within acceptable bands or limits, as we call it. Then of course there may be another factor related to, for example, the need of the specific business, the type of competition for loan money in the business. So there are several factors that would influence the interest rate for a business loan transaction, and it is not possible for an individual lender to practice riba in the modern business world in the context of a business loan. And one related factor may be that the interest rates in modern economies are basically determined, or they are at the mercy of the central bank of a country, and the central bank, through its monetary policy, sets the interest rates and of course then regulates them from time to time that are in the best interest of largest segment of the society or the economy. So it is ensured that there is no element of exploitation or abnormality in the interest structure that is prevalent in any modern economy. Okay, another related question may be that why do businesses seek loan? Why do they need loan? Of course, common sense would say that if a business is in need of money and there is a shortfall, it can't provide that money through its personal resources, and of course they would try to borrow that money. This is one reason, but there are other technical and financial reasons for which large corporations and businesses prefer loan money over equity, or the money that they can invest from their personal wealth. One such reason is that the loan money, or the borrowed money, is always considered as a cheaper source of finance. There is empirical evidence to support it, And the one obvious reason is that the interest provides a tax shield. So this would imply that the interest expense that a business has to pay on its business loan, it is a tax deductible expense. So this means it's going to lower the profits or taxable profits of a business, so they have to pay lower taxes. And second factor is that most businesses know that the interest that they're going to pay on a business loan or a debenture, the profits that they can generate through that loan money are much higher, because they pay only a fraction of the profit in the form of interest to the creditors. So because of these reasons, businesses prefer to borrow money so that they can utilize that money to generate wealth for their business and pay only a fraction of it to the creditor. So this truth will make it clear that there could be no element of riba in a business loan transaction in the modern world, because everything is highly regulated, and what the creditors get in the form of interest, it is always a fraction of the profit that is generated through that loan money. And we also need to keep this fact in mind, that why riba may not be present in the modern business world in relation to business loan transaction. We know that the financial institutions like bank, insurance funds or pension funds, they play a very dominant role. And basically they serve the role of, or they become the interface between the borrowers and the lenders. So what happens is that the lenders would open a deposit account in any financial institution, and the borrowers would seek loan from that financial institution. And of course, the bank is going to charge different interest rate to the borrower and to the lender. So what I'm trying to explain is that on the deposit accounts, the interest rate offered is much low. For example, when we discuss in the context of Western world, it is not even 0.5%. On the contrary, that the interest that they charge on the loan money, this may range from 6% to if we talk about credit cards, even up to 20-22%. So this interest rate differential is the income of the bank. But in any way, the interest rate that the creditor, even in the context of financial bank, that they charge on loan money would never result in doubling and redoubling the banks or the financial institutions' wealth in any case. This point we need to keep in mind, because this is the strict interpretation and definition of the concept of riba, as I have explained earlier with reference to verse 130 of chapter 3 of the glorious Koran. Now I'm going to conclude what we have discussed so far. So first fact that we need to keep in mind is that interest is not riba. Rather, interest is the price or cost for the utilization of factor capital. It's a factor of production, and this capital may be physical capital or this may be financial capital. Physical capital in the context of the state may include, light dams, road networks, buildings, and so on and so on. And this would apply to businesses also. For example, plant and machinery, their buildings, infrastructure. And financial capital is, of course, the money. And second conclusion that we can draw from all this discussion is that economic activity gets a boost when businesses seek loan from the financial institutions and generate economic activity, and this would ultimately result in generation of more capital. And if we just look at the first world countries, we know that there is excessive capital available in these countries because of this enhanced economic activity, and as a consequence, because there is excess supply of capital, the interest rate that is being charged is much lower when you compare with the interest rate that is charged in a developing country. In the developing countries, usually the interest rate is in double-digit figure, whereas in the developed countries, usually it is in the single-digit figures. So we need to keep this fact also in our minds. And of course, as I explained earlier, that businesses basically generate wealth. They are not needy persons. Once they borrow money, they are not going to fulfill their some essential needs like marrying a child or for the education of a child or for a shelter. What they are doing is they are generating wealth. And of course, morality and equity would demand that they should share part of that wealth or profits with the creditor. And of course, this is done through instruments like debenture or other loan instruments. Therefore, we can say with confidence that the glorious Quran categorically distinguishes between a personal loan transaction and a business loan transaction. In the context of a personal loan transaction, the glorious Quran commands that even if it is waived off as charity, this would be the most commendable act in the sight of God. On the contrary, when it comes to a business loan transaction, the glorious Quran would emphasize that all such affairs must be carried out with mutual consent. And if there is mutual consent and there is no exploitation on the part of one party, then of course this is an acceptable practice in the sight of God. I hope you enjoyed this video. Please keep watching for my future videos, and I would request, if you have not subscribed my channel at this point in time, please do subscribe it. Thank you.